You're listening to Market Champions, a podcast on navigating the financial markets. Here's your host, Srivatsan Prakash.
This episode of Market Champions is brought to you by Simplify ETFs. For more information, visit simplify.us. No simplified funds will be discussed during this podcast. Hey guys, welcome back to another episode of Market Champions. I just wanted to remind you to like, subscribe, and leave a comment. Really helps the page grow, really helps the podcast grow. Thank you so much for your support. And now on to the interview. Hey everyone, welcome back to another episode of Market Champions. Today we've got Matt Gertken. Matt Gertken is a strategist at BCA Research, which is one of the largest geopolitical, macroeconomic sort of consultancy research firms in the world. So he oversees their coverage of market relevant, political, geopolitical, policy development, stuff like that. And before that, he was actually at Stratford, which is awesome. He used to work with that before we got started, so it's just absolutely incredible. And so it's awesome to have you here, Matt. I think we're gonna have a great conversation.
Thank you, Sri. Pleasure to be with you.
Awesome. So first I wanted to sort of start with your background in geopolitics. So how did you get into the business? How did you also get into the side that focuses more on market related developments, as opposed to, I guess, general geopolitical research?
Yeah, well, thanks. So I've had a really interesting career, and it's been a great time. For 16 years now, I've been doing geopolitical kind of consulting, research, analysis. I basically started. Well, I was a literature student, believe it or not. I wanted to do writing. I was kind of thinking I would get into something like doing the type of work I read in The Economist or the Financial Times. And then I made the switch at Stratford in Austin, Texas, where I started as an intern. And there I got to know a lot of great people, and that's really my formal introduction in schooling in geopolitics. George Friedman was the founder of that company, and of course is a very big heavyweight in geopolitical thinking. And I learned a lot from him. I learned a lot from Peter Zion, who you mentioned, and Roger Baker, who ran the Asia analysis there, and that's who I worked for most extensively. I also had a great relationship with Marko Papic, who was the senior analyst alongside me. He kind of was the European up and coming analyst at the time that I was getting into Asia, and he then ended up going over to BCA Research and launching their geopolitical strategy. So he hired me and took me on in 2015, and so now I've been for 6 years with BCA. And when Marco moved on from that position, I took over and ran the strategy. And I also launched a new strategy at BCA, which is the U.S. political strategy, which focuses more intensely on domestic U.S. issues. It's kind of a complement to the geopolitical service, and looks at U.S. sectors and regulations and congressional issues, stuff like the debt ceiling crisis that just kind of went through. So I've just had a great opportunity to work with these brilliant people, and also I should mention Robert D. Kaplan, who you're probably familiar with. He wrote The Revenge of Geography, and most recently The Return of Marco Polo's World. He's a great writer, formerly a correspondent for The Atlantic, and I've worked very closely with him as well. So I've just been privileged to have a education in geopolitics.
Incredible, because you've sort of gotten to work with the best minds in the field, and having such great mentors is it has to be an incredible experience. And I'm really excited to get some of your views and some of your framework as well. So just to get started, I'm gonna start off with a heavy issue. So I'm going to start talking about China, Taiwan, what's going on, and so what we've seen sort of over at least the last few days. We've seen an increased amount of Chinese, I wouldn't say intervention, but Chinese sort of infringing on Taiwanese Air Force and so on. And so number one, how are you thinking through that? And sort of the vital question there is the U.S. going to sort of step in and defend Taiwan, or is the U.S. sort of moving semiconductor and other supply chains out of Taiwan into for example, TSMC is building a plant in Arizona, a very large plant that manufactures some of their most advanced chips. So how are you thinking about China, Taiwan? Is the U.S. actually going to step in and defend Taiwan? What's going on there?
Yeah, you're right. That is $1 million question. I mean, historically, the U.S. has defended Taiwan. So if we look at the three Taiwan Strait crises that have occurred, 1954, 55, 1958, and 1995, 96, the U.S. moved aircraft carriers, the Seventh Fleet, and forces into the region to essentially respond. In the 50s, it was because Chairman Mao was willing to use force, and he would actually attack some of the Taiwanese islands that are offshore the mainland. And then in 95, 96, Bill Clinton was responding to missile fire surrounding the island, and he sent 2 aircraft carriers, one through the strait. So if we're judging by the historical record, the U.S. will actually respond. And I think that was partially upheld over the past couple of weeks, where we learned, I mean, first of all, we saw the U.S. put 2 carriers very close by, southwest of Okinawa, along with a UK carrier. So 3 aircraft carriers, not a small display of force just in the past couple of weeks. But we also learned, we confirmed rumors that the U.S. had been putting Marines and special forces in to do training in Taiwan. Now, I think there is a huge difference between those previous incidents, which is, of course, that China is much more militarily capable. I think given that China can focus exclusively on Taiwan, whereas the U.S. has a whole global range of security interests, most likely China is capable of prevailing in a conflict within the first island chain, the island chain from Philippines all the way up to Japan. But most importantly, if it's centered on Taiwan. If the U.S. response is hesitant or partial, in that case, yes, China is very likely to prevail. And the bottom line here is that China has an enormous overbalance in terms of ballistic missiles that are precision guided. So it probably could prevail in just an all-out war scenario. And this is even more drastic over the coming few years. If there's any doubt today, there won't be a doubt in the next few years. So clearly that's going to change U.S. policy. The other thing is that the U.S. has, while we've always put forces in the region, we've always basically said we would defend Taiwan. At the same time, diplomatically, we've constantly downgraded Taiwan. We removed their UN seat in 1971. We removed the Mutual Defense Treaty in 1980. So it's like the U.S. is constantly saying, we will let Taiwan go as long as it's peaceful, but if it's going to be an attack, then we'll defend. And now I think there's considerable ambiguity about whether the U.S. would even defend. My own inclination is to say that the U.S. would partially defend, but for the most part, it would be a delaying action with the intention of then imposing a military cordon around China with our allies, so that the consequence of the conflict would be negative for China. But the condition of an outright war where the U.S. brings full force to bear to defend Taiwan, I don't know that the U.S. is willing to do that. U.S. opinion is basically evenly split, and China could resort to nuclear warfare.
Right. And I guess the other factor at hand, and I don't know if you've considered this, I guess you probably have, is sort of the dynamic that the U.S. in a way is sort of withdrawing from the world at large. I believe Peter Zeihan recently, after Joe Biden withdrew from Afghanistan, he wrote a piece and he talked sort of how the U.S. is, in a way, in the sort of the political sentiment, the political capital is sort of shifting away from the narrative of sending our sons and daughters to a faraway land to fight a war. And do you think that comes into play when it comes to Taiwan as well, or do you think they're going to take a different approach?
It does and it doesn't. So generally, analogies between Afghanistan and Taiwan are very poor, very much wanting. But it is true that it is true that Taiwan does not have a mutual defense treaty anymore, right? So they aren't technically an ally, and so that's obviously very different from Japan or Australia, and it's significant that those 3 carriers that we talked about in that big demonstration with Japan and the Netherlands and Canada all around the Okinawa over the past 2 weeks. Well, that's a significant line that's being drawn. Basically, the U.S. is saying we'll defend Japanese islands. We didn't put the carriers in the Taiwan Strait like Bill Clinton did. So maybe that would come a little bit later if Biden is an extremely daring president. But it does kind of look as if the U.S. has pulled back where we're drawing the red line, just on where the events have taken place today. Basically, where I would really think that the analogy is applicable to the Middle East. There is low appetite for Americans to get involved in wars in the Middle East.
Mhm.
And this is pretty clear. I mean, the number of people who believe that Iran is a significant threat or a major threat to the country is very low. The willingness to defend countries is actually considerably higher for South Korea or even the Baltics than it is for Israel, if you can believe that. And that's because Israel has become kind of a partisan issue in the United States. So basically, Americans don't want forever wars, and we don't want gratuitous wars. We don't want to launch preemptive wars. We don't want to be bogged down in the Middle East. But I would say that East Asia is a little bit different. Americans would be more supportive of defending South Korea, Japan, Australia, and probably, like I mentioned, 52% of Americans say that we should send troops to defend Taiwan. If China actually attacks, that number is going to go way up, maybe to 70 or 75%. But I do think that Taiwan could very easily lead to a Vietnam type outlook, particularly in a world where the American appetite for global empire is much lower than it was during the Cold War. And so from that point of view, I think you're right that there is going to be some hesitation from the Americans on Taiwan.
And just generally speaking, is what COVID has sort of, I guess, revealed is that the U.S. and a lot of the West is sort of dependent on supply chains that are outside the U.S., outside Canada, etc. And recently we're seeing sort of the impact of that. We're seeing shortages, we're seeing higher prices, primarily caused by these blockages within those supply chains. And number one, is there an incentive for, at least specific to Taiwan, is there an incentive for the U.S. to start shifting all the supply chains that go through Taiwan to, I guess, other safer locations so that, the economic value of Taiwan goes down? And number two, how do you actually go about playing sort of a China-Taiwan conflict kind of event?
Yeah. Okay. So on this, and you mentioned the semiconductors, I would say first that I definitely think that is the end game here, is that the U.S. can no longer be beholden to that particular choke point. So this has been Taiwan's Silicon Shield, and it still is an effective shield, at least judging by the last few years. And it's also, it does work in a way, because it's kind of a situation where if China did resort to full-scale invasion, then of course they would lose that wealth. They would use the plant, the fabs that are so advantageous for their economy and military. So it still has some value, but basically the U.S. has already shifted. We've got TSMC going into Arizona. We've got Intel. We're pumping $50 billion into semiconductors from the federal government. And by the way, that's a massive amount of R&D and subsidies to go into that sector. There have been some scholars that have pointed out that the federal support for semiconductor research in the 80s, which did lead to major breakthroughs in design, those were much smaller amounts of funding. So unless the funding is just squandered and wasted in boondoggles, basically you would expect that we would have some major semiconductor improvements. So obviously it takes time, but the point is that yes, the US, and not only the US, China, Europe, Japan, everybody is investing in diversifying away from Taiwan. So I think this is a big problem for Taiwan. It's almost like Taiwan is in the situation that the Middle East was in, where conflicts in the 70s and 80s forced producers to become innovative. And in particular in the US, we ended up ultimately getting fracking. Now that took a lot longer, although it was developing over that period, but I think in this case, it's very clear what the mission needs to be in the federal government. The Congress is unified on this issue. This is an area of clear bipartisanship, the Strategic Competition Act. So so I think Taiwan's going to lose its comparative advantage, unfortunately, over time. And Taiwan, Taiwan is split. I mean, one thing people don't talk about very much is that, of course, even though Taiwan is, public opinion is much more in favor of independence than it is for unifying with China, it still is the case that the Kuomintang and people that vote for the Kuomintang are much less inclined to engage in any kind of hard power or hard geopolitics, military machinations. They're much more inclined to look to a future where there's a peaceful resolution, which without openly saying it means that they are willing eventually to be absorbed. So I think the big risk there is, and this goes to your next question about actually gaming it out. I think the risk, first of all, is China's economy, and the whole seizure of Hong Kong occurred because it took China 20 years. They were growing rapidly. They were integrating with Hong Kong, and by the time they actually started to make the legislature dependent and the judicial system dependent on Beijing, the West could do nothing about it, and hardly even complained. So it was a fait accompli. Now, Taiwan is not nearly as integrated, and Taiwanese people can envision a future much more independent than the Hong Kongers could. But the takeaway from China is, well, look, if the U.S. has a history of intervening militarily, if an amphibious invasion has a history in all civilizations of being extremely dangerous and having unintended consequences, and meanwhile we're on a path of economic absorption, then really the long game should still be the calculus. And officially, it is still the calculus. I mean, officially, Xi Jinping has not changed Chinese policy, if you believe any of the rhetoric or any of the policy documents. The problem is, if China's economy crashes, then the trajectory falls, and then you actually don't have a credible argument that they will absorb Taiwan. And then the military, then the hawks are empowered because China's experiencing domestic unrest. They might need to go on a crusade to unify the country. And meanwhile, Taiwan won't be gravitating toward integration. So I think that's the biggest risk. And in terms of gaming it out in a conflict, well, maybe we can talk about that more. But basically, hybrid warfare has worked well for Russia. One would think that that's what we'll see with Taiwan initially. And so I would be expecting cyber attacks and economic sanctions and things like that prior to, some kind of full-scale invasion.
Got it. And one thing that you did mention there was sort of the impact of the Chinese economy and the way China would actually behave. And one thing that would also happen is if the U.S. doesn't intervene militarily, they could sort of intervene economically, try and stop the flow of dollars to China, try and stop the flow of dollars through Hong Kong. And number one, do you think that there are actually any implications, for the Hong Kong dollar peg in case of a Chinese invasion of Taiwan, considering the fact that number one, the U.S. is likely going to step in from an economic standpoint, placing sanctions, stopping the flow of dollars or investment into China through Hong Kong and Taiwan? Or do you think that the Hong Kong issue and the Hong Kong dollar is probably going to be a separate, I guess, almost a separate issue altogether, and not be intertwined with the probability of invasion of Taiwan?
Well, first, I very much agree with your point that the U.S. would respond economically. So, first of all, again, we can't discount, based on what I was saying earlier about the historical record, we cannot discount U.S. military action. Mm-hmm. In particular, if China is invading, like full-scale amphibious invasion, remember that this is 5 times the distance of the English Channel. So the transports are sitting ducks over the course of that. If you're an American submarine, or American air power. So the U.S. could intervene, but let's say the U.S. is not going to. Well, then I think it's very much the case that the U.S. is going to impose an economic embargo. And I think there's 2 problems with this. So on one hand, you can argue, well, look, because the U.S. still controls the oceans generally and the Persian Gulf, which is half of China's oil imports, you can argue that the U.S. still has the trump card here and that China therefore cannot invade Taiwan. Yeah. But if China should become irrational, and that's why I emphasize if they're having a domestic crisis themselves, like an economic collapse or a regime split, that's where things become very dangerous because they could become irrational. They could attack Taiwan anyway and basically dare the U.S. to impose an oil embargo on them, knowing that, of course, an oil embargo is an act of war itself. And maybe if you have faulty leadership, that could occur in China. I don't think we're there today, but it could happen. That's how World War II started, or in a similar way. So there's that element of U.S., but then also there's the way that the U.S. responded to Tiananmen Square, which is a slap on the wrist in the scheme of things. But it did involve multiple years of U.S. and Europe imposing sanctions on Chinese trade, and I think this time around it would be much more aggressive, and everyone would be cooperating. So yes, the U.S. would respond economically. there would be an embargo on China. Needless to say, it would not just involve technology, but it would probably involve all kinds of goods in banks, US dollar transactions. It would cause a financial crisis in China. And the US wouldn't have trouble getting others to participate. Europe in that situation, they still could drag their feet. But if we're talking about the military invasion of Taiwan, you would think that the transatlantic alliance would be functional in that circumstance. And then I guess that finally, so the Hong Kong dollar, I guess in a way, is a little bit of a sideshow given how huge of a global economic impact this would be. But within that financial turmoil that would clearly occur for the renminbi, and of course the yen would be blowing through the roof. The Korean won would probably be collapsing. A lot of other smaller Asian currencies would be collapsing because the Chinese currency is collapsing.
Yep.
But within that context, I don't think you could defend the peg. I think Hong Kong in general, in almost any question you would have asked, I would have said Hong Kong could probably defend the peg. But if we're talking about a war between the US and China, or a proxy war, and the breakdown of the security architecture in Asia Pacific, then I don't know that they could sustain.
Yeah, got it. And what other how if you were a trader trying to trade this sort of a thing, how else? What other positions would you have? So you talked a little bit about in the event of either a proxy war or some sort of a war, in East Asia, you would see a lot of these smaller Asian currencies collapse, primarily because they were sort of tied to China, and when you see China collapse, they start to collapse. So how else would you be positioned, as an investor or a trader, sort of trading this type of event?
Well, it's a massive risk-off event because the fear will be nuclear war between the US and China. Now, those of us who do geopolitics can talk about mutually assured destruction and the way that nuclear weapons have been have not been used, effectively because of because nations are rational actors, at least to some extent. But there always is a risk. I mean, some of those points can be overstated. Nations aren't always rational. Anyway, the market's going to go to the extreme in that circumstance. So it's going to be a tremendous risk off. And the other thing is that if we compare Ukraine, for example, Ukraine was not a pivotal piece of geography, whereas Taiwan is, and the South China Sea is, because what we're talking about is the supply lines, the vital lines of communication for the Japanese economy, for the number 3 economy in the world. We're talking about the vital supply lines of Korea. We're talking about the potential for US-China war and the potential for Japanese-China war. I mean, let's not forget that Japan is still a nation that has national interests, so that even if the United States is shirking its global duties or global interests or ambitions, Japan might not.
Yeah.
And commercial warfare by the Japanese, again, like submarine warfare, I think could be very possible in that situation. So Taiwan is pivotal. It's on the first island chain. And the South China Sea and Taiwan are connected. Of course, this is all part of the supply chain for all of Northeast Asia. So that's all the wealthiest economies in the world other than the US. And so it's far more dramatic of a financial event, not to mention economic and military. And so dollar rallies, US treasuries rally, Swiss bonds rally. I suppose I guess there could be a debate about the Japanese yen. Japanese will bring their money home, the yen will rally. But I guess it's conceivable in some kind of total breakdown in Asia that you could even start to see other nations more concerned about the yen. Maybe the Swiss safe haven would be the superior one in that situation. So, but basically Europe would become a massive safe haven, and the euro would, because people would be looking to distance themselves from an entire region, and in a region that of course has enormous capital.
And I think that was a great answer on sort of how the market dynamics play out. And I wanted to stay on China for just another minute and talk a little bit about So recently, what we've seen in China is we've seen this crackdown on tech in China, and a lot of people have sort of described that as a power grab, and we've seen Alibaba, Tencent, the KYBTF. So the KYBTF the is the ETF, that sort of is sort of the most important Chinese tech ETF. So how are you thinking about the handling of the CCP when it comes to technology? Is there sort of a buy the dip or a value investor, mindset kind of play there, or do you think that it's almost something that you just it's something that you pretty much just put in the garbage, and you just don't you just don't go anywhere near it pretty much. So how are you thinking about the CCP, their implications on tech with regulation and yeah.
So there's a lot to say here from the geopolitics,
All
but
right.
let me start though just quickly with the market. So China needs tech and innovation because otherwise their potential GDP growth is collapsing if they can't lift productivity and if they can't start generating total factor productivity. And their industrial programs for 10 years now have been geared toward creating a more high-tech manufacturing sector and a more high-tech society. So they really can't afford to kind of kill the golden goose. So this is about control rather than about, or let me put it this way, this is about putting a leash on these companies rather than, asserting Communist Party power without regard for the market. Because if it were total disregard, you'd be North Korea ultimately, which is not really what Xi Jinping intends to do. Now, it could be the effect ultimately, down the road, but that's not the intention. The other thing is they want foreign capital, so they're always going to open and shut the door. China always plays this game of market access, which is, it's their leverage for the rest of the world.
Right.
And so, there's been a debate about whether China's investable or not. Well, it's a binary, and of course, binaries are a lot of times not very helpful. China is investable at the right price. It's just that the price has to come down a lot from the point that it was over most of this decade, where the tech companies were where it was looking like China was taking a capitalist freewheeling approach to the tech sector. In reality, the tech companies in China always collaborated with the government, and they weren't trying to overthrow the government. And Jack Ma was not going to try to undermine Xi Jinping, although he did throw a few barbs at the regulators, and specifically Alipay was threatening the primacy of the banking system, which is one of the Communist Party's greatest levers on power. So the Communist Party has always practiced the control of the commanding heights of industry. Tech is now one of the commanding heights of industry, and so there's an effort to make sure that it's under control, and that's disrupt the process. Ultimately, it is bad, right? I don't think you can have a reversion to kind of full-on strongman rule, a crackdown on the sphere of ideas, discourse, culture,
Yep.
and a closure to the rest of the world, which is also part of Xi Jinping's agenda. The dual circulation idea is a domestic-oriented idea. So it's import substitution. So this is a turning a cold shoulder to the rest of the world. And when you look at how other countries have become successful through innovation and through technology, it's by opening up. It's by being cosmopolitan. It's by creating a laboratory of internationalism, places like Silicon Valley. It's not by closing your doors. It's not by autocracy. Of course, there are those who will defend autocracy because they'll point to somewhere totally different than China, like Singapore, and they'll say, hey, look, it worked here. And even Japan was basically a single party state, but Japan didn't have a dictator, and Japan's technology sector became obsolete because it was disconnected from the rest of the world.
Right.
So I think they're going down a path that is not rewarding, that will not produce the amount of innovation that they want, will not produce the productivity gains that they want. But they will continually wax and wane in terms of these regulations, because when it becomes too intense, they don't want to kill all entrepreneurship. They don't want to kill all the tech sector in investment appetite, and they don't want to kill all foreign investment. And so that it's just kind of a game that of tightening and loosening that China's always doing. But the general trend, unfortunately, I think is bad for that sector, and specifically for social media. And this is why you've seen this whole discussion emerge between soft tech and hard tech. Of course, the Communist Party supports hard tech like semiconductors, but they don't want people organizing on social networks. In fact, social networks inherently were always viewed as a threat to the Communist Party. If it was civil society, NGOs, lawyers, and bar associations, that they've always been fearful of civil society, and social media is a form of civil society. So that's going to get the short end of the stick. But there'll still be subsidies for the hard tech sectors. And then I think the problem is, if you're an investor, it really depends. First of all, are you American or not? Because Americans are going to be subject to sanctions because of this great power struggle. And I think George Soros is correct about that issue. Now, other countries might not be immediately subject to U.S. sanctions. Maybe ultimately they will be, but they might have more leeway in terms of getting access to China. But I think that, like in Europe's situation, they're still very cognizant of the fact, like Germany or Sweden, that the direction China is going will lift China's manufacturing prowess, which means that they will erode the comparative advantage of the Germanys. So even Europe will become more protectionist under Xi Jinping's current direction.
And so, are they going to have to, I guess, in a way, make a large scale shift away from, the path they're going down right now? Or do you think that, as far as the eye can see, they're probably just going to keep going down that path? You talked a bit about, at the end, you talked a bit about, number one, European protectionism, eroding away Germany's competitive advantage. And so, that is in a way good for China, right? Because China is sort of the more competitive one in that sort of situation. So do you think that, at least as it relates to China, do you think they're going to make a U-turn eventually and go back to deregulation, or do you think they're just going to continue increasing amount of regulation so that Xi in a way is able to maintain control?
I think it will wax and wane, and specifically, after the 2022, the 20th National Party Congress, which is a political rotation, very important. That's most likely going to be in October of 2022. So after that, Xi Jinping will have consolidated power, and he can let 100 flowers bloom. And this is the great thing about being a strongman leader, is that he can allow innovation to thrive for a period. But then if it becomes threatening, or if he's concerned, then of course he can snuff it out immediately and cut all the tops off the flowers. And that's what Chairman Mao did. But I think, Xi Jinping is inheriting a much better situation than Mao was, right? Mao had a backward economy. Xi Jinping has a decent and a complex and a fairly sophisticated economy. So I do think there will be a loosening, and that will attract foreign investment. And you'll have some of the, even Americans, you'll have people putting forward this argument, see, look, we were right. China is investable. Not only that, Chinese tech companies are still going to be the big play. The problem is that in a strongman rule environment, rule by law, not rule of law, if Xi Jinping wakes up on the wrong side of the bed, then you can have a famine and 45 million people might die. The system is becoming permanently riskier because of the concentration of power in a single person, which we know distorts the flow of information to that person and can also lead to policy mistakes through emotion. Humans are emotional, and you try to mediate emotion through having a committee, which is what the Politburo Standing Committee did in previous Chinese administrations. Now you don't have that. So anyway, I think you will have investors come, but I think it's got to be short-term, high-risk money. I think the allocations to China will be on a tight leash. And I think institutional investors, specifically American institutional investors, should not go there, because I think they're looking at investing in the Soviet Union circa Sputnik era. It's dangerous.
Yeah. And my next question, I wanted to focus on two things that are somewhat related, but not fully. So number one, with China, one major development that we've sort of seen over the last few months, or at least over the last year or so, is this introduction of the digital yuan or the digital renminbi? And number one, what are the implications of that for markets? And number two, just on the renminbi, one thing that I guess dollar bears and people have been saying that the USD is going to fall out of reserve currency status within the next 10 years or the next 20 years. But what they've been pointing out is sort of the shift in Russia-China trade into yuan from US dollars. So does the yuan really pose a significant risk to US dollar being the hegemon for the system, or do you think that overall it's overall status quo is probably going to be maintained considering the fact that most of the West doesn't trust yuan?
Yeah, I do not think that the yuan poses a threat in the foreseeable future to the dollar as the largest reserve currency. I think the dollar's preponderance can diminish if the US makes up 60% of the global reserve basket. If the US dollar does, that could descend maybe to 50%. It's hard for me to imagine us going below half, especially if you look at transactions, and you look at how integral the dollar still is, despite everything that's been written and said to the contrary. But maybe you could even, looking at the euro, for example, and this is some work that we talked earlier about Marko Papic. Some work that he did showed that the EU, the euro could get up to 30% or slightly more, based on like a look at where the various European currencies stood in the 80s in terms of the global reserve basket. The euro should be able to reach theoretically the same level that the combined European, the franc and the Deutschmark, etc. So, maybe that could happen. But I think, first of all, I think that's a great talking point for the euro rather than the yuan. But second of all, the problem with the yuan will still rise. Like I would expect it to rise in the overall reserve basket because it's just nowhere near the level that one would expect based on China's primacy in trade or their weight in global GDP. So, you can see a lot of improvement there. But first of all, China, let's talk about the fundamentals here. China has a closed capital account. You cannot freely exchange this currency. You don't have a rule of law within China so that you can be sure to remove capital that you've put in. That everyone loves to talk about central bank independence as a hallmark of a reliable long-term currency, but the central bank of the People's Bank is ruled by a party secretary. The governor of the People's Bank is not in charge of the People's Bank. You actually have a Communist Party secretary above the governor. So talk about a politicized central bank, which of course we've always known. It's always had a very active role, political role. And meanwhile, the Chinese have printed more money than the other nations since the global financial crisis. Far more money supply expansion than the U.S. So, I think that's all problematic for the yuan, and you got to look at these factors as to like how countries become reserve currencies. And one thing that I always look at is people want to store their wealth there over a long period of time because they believe that the properties that they hold there will retain their value, that they will be able to freely go to and fro from those properties, that they will be able to freely sell those properties, that their children might inherit those properties, that their children might want to go to college there and actually live there. And the United States has that. The United Kingdom has that. And that's why countries around the world pour capital into those areas, or maybe Japan to some extent, although it's not as much of a haven for immigration, never has been. But so basically you've got this need for China to become an international location, but they're really not cultivating that. So I think it's a rough road, and I do think the yuan will expand as a reserve currency, but I don't think it'll be a big one. And meanwhile, the dollar will remain prime, and the dollar will be shaken by major events. Okay, so let's look at what has shaken the dollar in the past. The Iranian Revolution shook the dollar. And that's really interesting, that because you might think the opposite, but the oil price skyrocketed, so the dollar collapsed, And in fact, you ended up seeing the wealth of a lot of other currencies benefit. And that was a major, historic hit to the US as a reserve currency. But then the fall of the Soviet Union reversed that, and then in the tech boom in the 90s. And look, subsequently we had the 9/11 crisis. So that since then the dollar has lost ground as a reserve currency. Although recently you could maybe argue that it's kind of stable. But here's the interesting thing. I think one thing that tells us is that when there's shocks from the Middle East, when there's shocks to the global economy from a commodity standpoint, then that benefits commodity producers and that weakens the dollar. But we so far have not seen that happen, for example, with this geopolitical conflict with China. If anything, slower growth on a secular basis in China is deflationary, and people end up buying the dollar and buying treasuries. And it's been remarkable this year specifically to see that the dollar's fall was arrested as China's economy slowed. So anyway, long story short, I think it's going to take a series of earthquakes to dethrone the dollar. It still will probably have a plurality of the global reserve basket, even if it doesn't have a majority. And right now it has a lot of cushion.
So I wanted to move away from China and talk a little bit about U.S. Congress and sort of number one, how does I guess the rest of the world from a geopolitical standpoint actually view the debt debates that are going on in Congress right now, with the debt limit, is it just political theater or is it actually concerning, because number one, a long-term solution, it sort of seems unlikely. And number two, Marco Papich has, in his book, Geopolitical Alpha, he described a shift towards a shift towards increased state intervention, or what he calls regisme, increased state control. How important is that to sort of the long term dynamics of U.S. debt? Does the number one, does the increase of default go up? Does the what are the impacts on the U.S. economy, considering the fact that number one, you can't raise rates, and number two, you're on top of that, you're seeing slowing demographics. So I guess that's a loaded question right there.
Yeah. Look, there's a lot there, but I would warn you though. I mean, U.S. demographics are a lot better than most other places,
Yeah.
and specifically as long as we maintain open immigration, which is, sometimes the immigration debate is needlessly partisan. From an economic point of view, it's very clear that the U.S. wants immigration, both from a brain drain perspective, but also from a labor force and potential GDP perspective. So, from that point of view, the U.S. is capable of generating inflation, and will have to hike rates, and we do have a higher terminal interest rate in the U.S. The risk is that the ECB and the BOJ can't ever hike rates again, or China, like if they have a property sector collapse in China, which is entirely, could be already happening, but certainly is in the cards in the coming years. The People's Bank won't be able to raise rates. So that, again, that, by the way, that dovetails with our point about the dollar. You actually can raise rates at least a little bit in the U.S. And the problem is no one else can, and therefore you get a strong dollar, and in the Fed can't hike very much. But more to your question about, U.S. political dysfunction. Well, first of all, we are at a very peak level of polarization, from a historic point of view. So you can measure it. Political scientists measure it. What I like to use is I use the presidential approval, the difference of the presidential approval by party, because if only 10% of Republicans approve of Biden and 90% of Democrats approve of Biden, you have an 80-point differential, and you can constantly you can chart that differential to see how high polarization is, and today it's extreme. So that means we can still have disruptive events. Now, I totally argued that the debt ceiling was noise in Kabuki theater this time around. But if you asked me over the next 5 years, what are the odds of the U.S. having a technical default due to the debt ceiling? I would give it something substantial. I would say maybe a 20% chance, maybe even like a 30% chance. Like, the point is that at high levels of polarization, if the Congress is gridlocked, which it is not today, a key factor, but if the Congress is gridlocked, you can definitely see this happening, especially if it's just some technical thing where, like, for 5 days, we're technically defaulting, it would have a negative impact on treasuries and on global financial stability, but it would quickly be resolved. But of course, a longer running default kind of out of the cards. And one reason for that is because of what we learned. Look at the options that the Democrats actually had this time around. They could have done it through reconciliation. They didn't want to, but they could have. And that could have, at most, it would have taken 2 weeks. So people were exaggerating how long that would have taken. They could have canceled the filibuster. Some of the moderates didn't want to do that, but in the 11th hour, on the brink of a historic national default on debt, they might have changed their opinion, especially if it's just a little tiny filibuster carve out just to avoid a default. I think that's very probable. So that's why I wouldn't put the odds too high, because there are mechanisms to avoid this. But at high levels of polarization, people should not rule out the self-inflicted wounds that the US can commit. And the reason for that is because there isn't an international police officer. People buy treasuries anyway, because what the world keeps saying is, you know what, we're going to buy treasuries even though America's politics are dysfunctional. And the reason for that is because of the dysfunction that is constantly underrated in China, in Russia, even in up and coming places like India. Their dysfunction is everywhere. And the US, like drama, the melodrama that's constantly playing out in Washington, easily has become routinized for investors. That can occasionally cause a market riot, but it also, we've seen, repeatedly culminates in a global retreat back to the dollar. And so this dependency on the US as the final consumer, as the largest economy, and as the largest military power, that becomes very hard to break. And the way that you break that is by dethroning the US from a fiscal point of view, repeated bad management for a really long time, but then you also have to have an alternative. So China has to undergo some kind of dramatic transformation. Not only do they absorb Taiwan and become the de facto empire of East Asia, but they also open up their economy and become a more open and vibrant market for financial assets. And then their debt becomes accessible to everyone. And then you actually have a competing pool of liquid and deep debt securities that the world can be attracted to.
That makes sense, especially the point that you made, which we see inflation, U.S. actually has room to raise rate. I think Peter has made that point as well, that the U.S. demographics aren't good per se, but they're far better than the rest of the world. I wanted to move over and talk a little bit sort of your framework and your philosophy for thinking about geopolitics. And so number one, how do you actually go about number one, thinking about geopolitical events, and how do you translate them into, I guess, trades or investments?
Yeah, good question. Okay, so first of all, and again, this is where we can go back to kind of our original discussion. I've been very heavily influenced by a lot of people. I would say, first and foremost, though, my approach is different than some others in that I have a very strong attachment to what I learned studying the humanities. So specifically, the notion of constitutional government, or checks and balances, and multiple centers of power, specifically like 3 branches of power, or they used to say like the king, the nobles, and the commons. You had these different classes that keep each other in check. Those concepts to me are extremely valuable. You have to be very flexible and theoretical with how you apply them. But the point is that I tried to identify what the checks and balances are. That's why, on the one hand, I end up being pretty bearish about China, because you don't have an effective political check. And also the households are too downtrodden in China. There's a vast imbalance where the government and the corporations are exceedingly powerful, and like the corporates have racked up an enormous amount of debt. And now China has to deal with the consequences of those imbalances. So I think checks and balances are a critical function. And you can look at that through the perspective of political power or through the perspective of property, who owns the ownership in the society. And then, so like in my US political strategy, readers are very familiar with me getting into the constitutional nitty gritty, not in a legalistic way, but in a realist power struggle way, like in the way that the Congress and the presidency are actual power forces that are struggling with each other. So applying realism to the domestic economy, I think, is essential, but also applying realism to international relations where you do not have a constitutional system, right? Of course, that's important. You have something that maybe closely resembles it, and in the best circumstances, maybe you can have a balance of power. But basically, the international system is slightly more organized than people realize. You know, I take a realist approach, so it's a chaotic sphere, but there is some society within the chaos because you have great powers that have to negotiate with each other. Yeah. But then on the domestic sphere, it's less ordered than people realize, and that's why the debt ceiling is so fascinating, because it breaks through that idea that, oh, we're part of a domestic constitutional political structure, we're all part of the same phenomenon, and therefore the conflict should be minimized. Well, that might work in Germany or Canada, but like in the United States, you have a full-scale realist power struggle taking place within a constitutional system. So I think those ideas are really critical. And then the way that they apply to the market. So first of all, I can be very blunt about, or at least what I've learned over the years is that you need to be very blunt about the views. And sometimes that can hurt you in the short run. And what I'm saying about that is, for example, like when I look at Russia, Russia is a declining power from population and economic point of view. It has an outsized military. It's very ripe for domestic unrest. It has a long history of unrest. Peasant rebellions are a fact of life in Russia.
Yep.
So Russia is fundamentally destabilizing and in decline, and that's fundamentally destabilizing for Europe and for other regions. And that means I'm going to be constantly negative on Eastern Europe and Russia from a market perspective, even though like this year, Russian equities have done great. The ruble's done great. Oil's rallying, etc. So you can be caught offside if you're too geopolitical, but what I've found over the long run is that geopolitics matters, and investors should have a long run perspective if they're thinking about, conserving capital. Now, the other thing is, well, obviously we talked about some of our big influences. Well, I've learned an enormous amount at BCA Research. BCA Research has been around since 1949. Macroeconomic research, a huge engine for understanding the way that the debt super cycle works, which is a policymaker dynamic. It's a political economy dynamic where policymakers are constantly reflating, and debt is constantly accruing, and then dealing with the periodic instability that comes from that. And then also, of course, working with Marco, whom we've mentioned today, and his book Geopolitical Alpha, great example of this. And what Marco does, so Marco is very nimble in his ability to look at the geopolitical constraints and then see how they clash with what is taking place and being priced in the market, and then trying to generate alpha from that. So that's a method that has been hugely influential for me.
Yep. And, could you sort of give us a couple of examples of, how you apply this framework to, I guess, actual trades that have ended up producing alpha?
Yeah. Well, okay. So I think one example would be when we look back at the crash in 2020. Mm-hmm. So at the beginning of the year, I told clients to de-risk, and I had 3 arguments. Now, 2 of them now seem like a joke. But one of them doesn't, because one of them was the virus, right? So the virus is spreading around in January and February. And I said, look, when you've got this human-to-human transmission, and we're not quite clear, how devastating this is going to be. And at the same time, we had what I believed was a breakdown in relations with Iran. And I thought that the Trump administration's instability as an administration was going to lead to greater conflict with Iran. Remember, Qasem Soleimani had been assassinated, and I had been calling for this all along. So my calls on Iran escalating had been coming true. Then you start seeing the Trump administration facing this election environment. And to me, it was not too crude to envision wag the dog type scenarios in which Trump massively escalated. And in fact, at least if you're going to take, the words of our journalist, from DC who wrote Peril, Woodward. Yeah, if you're going to take Bob Woodward's word for it, basically Trump was entertaining wag the dog type scenarios. So,
Yep.
and then finally you had Sanders, right? And what I was saying is, look, Bernie Sanders is capable of winning the nomination in an environment where the virus is creating an economic downturn. And so you have a lurching, now that view, I think today, many people would say it was a little bit pie in the sky, but whatever. At the time, I said, look, you've got Sanders, he has a chance. You've got Iran, it's visibly escalating, and you've got this virus, de-risk. And then in March, when Congress passed the massive stimulus, we went long energy. And the point of view there was effectively we could look at what was known from the virus at the time, and it wasn't Ebola. So even though it was a bad virus, it was deadly. It wasn't deadly enough to say that we're going to be dealing with a depression. And once we made the call on we wrote a report called No Depression, and we went long energy. And also part of that call, remember, also had to do with the Russians and the Saudis. And we were saying that it was completely internecine for them to have a market share war.
Mm-hmm.
So it all kind of came together. We also, later that year, we went long materials, which ended up being a beneficial play. All of that was based on the view of reflation, was that policymakers would do whatever it takes. And of course, that's the language that they immediately used. And we saw the largest non-war stimulus in modern memory. But I guess some other ones, I went long gold in 2019, and I still have that trade on, and it's done very well. Obviously, it's down a bit, and I do think that with taper and the Fed hikes and things, that gold faces some risks. But long-term view on gold should be beneficial because it's good for it's a geopolitical hedge, but it's also an inflation hedge, and I think that makes gold attractive. And then finally, we went long the TPP, the Trans-Pacific Partnership, basically saying, look, these are the countries that the U.S. deemed as strategic and capable and holding the future. They're the post-China countries.
Mm-hmm.
And they also, they trade in line with global equities as well. So it's a global equity play, but it's also a play that's kind of focused on countries that have a security relationship with the United States, that have some dynamism, like you look at Malaysia, its role in the tech sector, or you look at Vietnam, the fact that it's kind of the next in line for the China model, very high productivity society. So, those are some examples of trades that we've successfully executed. And I think where they came from ultimately was the point of view that policymakers need to be reelected. They need power, so they're going to do what it takes, and they're going to reflate. And that's how we got through a lot of calls. Now, there will be a day at which reflation is no longer in fashion.
Yeah.
Maybe if inflation comes back and we have a new stagflation, then people will vote in favor of slashing government, or cutting deficits. But we're a long way from that when you think about the fact that the U.S. has really only recently had this sea change in favor of large deficits and in favor of fiscal spending.
Yep. And just to wrap up the interview, so are there any other geopolitical events going on right now, or anything just in general that you wanted to discuss that we haven't touched on?
Yeah, I think the debt ceiling in the U.S. stuff is a noise. I think the real risks are China and Iran. I think China, the big risk is the property sector and contagion. It's not just Evergrande. It's the fact that you have financial imbalance in the system, and the government is trying to. The government's belief is that they can contain this. And what they specifically are saying right now is that exports in the global economy are good enough that they can maintain tight monetary, fiscal, and regulatory policy. I think that's a huge problem. Now, what Xi Jinping wants to do is tide things over at least until after he consolidates power in 2022. But, Murphy's Law, Xi Jinping might not want this to happen, but it could be the case that we get a property sector collapse before then. The other thing is, of course, some people argue he wants to do that in order to punish, billionaires. But I'm not as inclined to that argument. I don't think he's going for a full Maoist purge yet, but I do think that the system could unbuckle beneath him. Then with Iran, quickly, they're rapidly approaching breakout uranium enrichment levels. The Israelis are willing to have the U.S. go back to the agreement, but the thing is, the 2015 agreement, it's looking harder to do because because Iran has a historic opportunity to acquire a nuclear device. North Korea did it. North Korea gets visits from the US president, Libya, they gave up their nukes. Gaddafi got bombed by NATO. Ukraine gave up its nukes, and everybody solemnly swore that they would defend Ukraine against aggression if it gave up its nuclear weapons. Well, guess what? It gave up its nuclear weapons, and nobody lifted a finger when it got invaded. So nuclear weapons are still the path to survival, and Iran might believe that it has a once in a lifetime regime opportunity to acquire the nuclear deterrent. And the only thing that can stop that is if Biden and Israel are combined extremely Trumpian. If they use maximum pressure now and make a hard red line, then maybe they'll force Iran back to the negotiating table. But that's not really what's happening. And so I think that could incentivize the Iranians to make a dash for the bomb. And so I think we'll have a Middle East conflict, and I think that will escalate the oil shortages in the near term. But over the long run, I think China's imbalances in growth are the bigger problems. And so that's where we get this weird situation where inflation is the big risk today, but China's future problems are going to weigh on global growth.
And Matt, through this interview, you've given me a lot to think about. So I'll probably spend a lot of time thinking about it. But with that, thank you so much for being on the podcast. It was awesome having you. I think listeners are going to really enjoy it, and it's a great way to finish off a Friday afternoon. So thank you.
I agree, Sri. Thank you very much for having me.